Hello everyone, welcome to another episode of Al Investing, and in this episode I'm going to be talking about the stock market crash of 2020, how I'm navigating through it and how you can as well. So don't forget to subscribe and let's get right into the video. We are in March 2020 right now, and as I speak, we are having one of the worst stock market crashes that we've had in recent history. And my heart goes out to everyone out there that's suffering major losses, but more importantly, I want to send out my condolences to friends and families of people that have suffered from the coronavirus. So far, the S&P 500 has lost about 18%. Italy is shut down, fully quarantined as a country. Nobody is allowed to leave their homes, and Saudi Arabia and Russia failed to reach an agreement, which led to the decline of oil prices by 20%. Now that's a pretty bad combination of events that led to most people, individual stock investors like you and I, go out and sell everything that they have. People are freaking out and everybody's going out there and selling their stock portfolios, and nobody wants to be in the game. As a focused dividend investor, I never lose track of my end game. I invest for dividend income and a retirement focused portfolio. I want to retire off dividends in the future, and I want to own a few of the best quality companies in the world. So when a crash like this happens, I see this as an opportunity to buy these best quality companies at a major discount. Since the beginning of the history of the stock market crashes have 100% of the time bounced back. Some will take 1 year, others will take 5 years. At the end of the day, all of them bounce back. And because I'm a long-term investor, I see this market dip as a chance for me to buy more stocks and increase my returns when the market bounces back. But the hard part of this all is resisting the urge to sell your stocks. It's hard for everyone out there, and it's hard for me as well. But when that thought passes through my brain, I repeat the mantra, keep the end game in mind. Just repeat that in your head, say it in front of a mirror over and over again, and it will boost your confidence to do the right thing. So what do you do now that the market has crashed? Do you try to find new companies to invest in, or do you invest in companies that you already own? The answer is it depends. Everybody out there has a different kind of portfolio, and there's no one answer fits all kind of thing. Each portfolio is catered to their own holders, and the best thing that I can do for you is tell you what I'm doing with my portfolio, and hopefully you can learn something that you can apply in your own situation. For me, I only invest in a few number of companies, 15 at max, because research shows that a portfolio with a small amount of companies has a higher chance of beating the S&P 500 returns over the long period of time. I keep the number of 15 as my max limit, but I also focus the majority of my holdings in my top 10 positions. Right now, currently, I have 14 stocks in my portfolio, leaving that one empty position for when a really good opportunity comes along. As of right now, I don't see this opportunity happening unless the market drops to 25 to 30% at least. So until then, I'm not going to be going out there trying to find new companies to invest in, because I'm just going to be adding to my current positions that I have, and especially I'm going to be adding to my top 10 core positions that I currently own, because I plan to hold these stocks for a very long time, hopefully forever. I have done a lot of research on the companies that I currently own, which led me to buying them in the first place. The fundamentals and the reasons behind why I bought these companies haven't changed, so a market crash shouldn't change my position in the matter. The companies are just now selling at a lower price, so of course I'll be buying more. I love buying these companies at lower prices because I truly believe in them. I believe in their long-term prospects, and I believe in their sustainability, and I believe in them to help me achieve my financial goals in the future. So as of right now, I started buying these companies, and I started buying them at a more aggressive pace. And by aggressive pace, I don't mean spending all of my money in 1 week, but instead of buying stocks once a month, I am buying them twice a month, and I'm increasing the dollar amount that I'm buying with. Because frankly, I don't know how long this crash is gonna last. It could last 2 months or even a year. But looking at where the prices are right now, I'm comfortable buying at a more aggressive pace because I know these are cheap prices for the companies that I own. Now, in the case of oil, our memory is still fresh from the 2015 oil recession that happened. And what happened is a lot of small oil companies have filed for bankruptcy, and a lot of the bigger oil companies have survived but are still suffering from that recession till this day. I'm staying away from oil right now because I believe oil companies tend to take a long time for their prices to adjust to current market conditions, and usually it takes about 3 months for the price to fully sink in with the events that are happening right now. So my advice for you is wait about 3 months until you want to make any decision on an oil company that you want to buy. I've learned that the hard way in the 2015 recession, where I started buying too soon, and 3 months after I bought, the prices were way better than what I bought them at. So I've learned my lesson and I'm going to wait a little bit for oil. However, I'm not really excited about the future prospects of oil. I got into oil heavily back in the 2015 recession because I thought there were some great value stocks back then. However, as time went on and I grew as an investor and I learned more, I prefer to stay in businesses that are not commodity businesses that have franchises and that are monopolies or duopolies. These type of businesses provide healthier profit margins, better business fundamentals in general. So yes, I am invested in oil, but I'm not that excited about it. I won't sell my oil stock position, but I'm not going to be adding a lot to it either. Even in 3 months, if the price goes lower, I'm just gonna add a small amount. I'm gonna definitely focus on my top 10 positions so that I can get those up to a level where I want them to be. So that's what I'm doing with my oil company that I own right now, which is Suncor, by the way, ticker symbol SU. I'll give you guys an example of one of the companies that are in my core positions that I'm currently buying right now, which is the company 3M. I started buying 3M at the end of last year. I believed it was a great company back then, and I still believe it's a great company right now. The company fundamentals haven't changed. In fact, I'll put a link in the description below if you guys want to check that out. I did an analysis video on 3M. It's very informative, has a lot of information on 3M. So if you guys want to check it out, click the link in the description. And yes, 3M might get affected by the coronavirus, but like any other pandemic in history, they all pass. And when it passes, 3M is still going to be a great company to own over the long run, and you will be able to capitalize on the current fear of the market. It's hard for me, as it is hard for everyone out there, to keep their composure in times like these. It's a lot easier to keep your composure when you own a group of great quality companies. And I'm a lot more comfortable seeing those top quality companies go down than I'm comfortable seeing poor or average companies with unhealthy balance sheets go down. And that's another advantage of limiting your stock portfolio to 15 stocks, because it forces you to pick very, very carefully. Right now, I'm happy to see all my companies go down because I'll happily buy more and more of these companies and never have to worry about selling them at any point of my life. This is the mentality you have to have when buying any company, because you're not going to be able to find the best time to buy or sell a stock. So the best decision for you as an individual investor is to plan to buy for life. By doing that, you're decreasing the risk that you take, and in 30 years, who cares if you bought 3M at 150 or 160? It really doesn't matter. It's gonna mean nothing to you at that point. Companies that are gonna suffer the most right now are companies that have poor return on equities, large amount of debt compared to their equities, and low profit margins. So definitely stay away from those companies, and again, focus on your top quality companies. Even if they haven't gone down as much as the other companies have, focus on the fundamentals. That's gonna help you out the most. Focused investing is hard and not for everyone. If you're just starting out, I highly recommend that you invest in an index fund that tracks the S&P 500 or the NASDAQ index, and just keep investing money in the S&P 500 right now and you'll be just fine. However, if you want to achieve better than average results, then focus investing is definitely the way to do it. I chose focus investing because I do want to achieve better than average results, but I also want to control what I own. I also do it because of ethical reasons, partially due to the fact that I'm religious and I don't want to buy companies that sell cigarettes or alcohol or sell guns and weapons that are going to harm the community and the world that we live in as a whole. I want to feel great great about the companies that I own, and I want to pass that mentality to my kids and grandkids, hopefully one day. So whether I beat the market in the long run or don't, it doesn't really matter to me because that's what I chose to do. What matters to me the most is at the end of my days, people around me are going to say that I cared more about my values, putting in the work, and not about the results. So to summarize it all, number one, do not panic and do not sell. Hold on. Number two, buy more of your core stocks, the companies that have the highest quality. And I'll leave you all with a quote from the great Warren Buffett: be fearful when others are greedy and be greedy when others are fearful. That's all I have for you guys today. Make sure to like this video and subscribe to my channel and share in the comments below what you guys are doing in this market crash. I'd love to hear your opinions and we can talk about it. Check out my other videos as well. Thank you, and I'll see you in the next investing video.